Today on Crypto Channel Direct, Solana suffered major network failures over the weekend. Binance is once again being investigated for regulatory violations, while the New York City mayor accepts his first paycheck in Bitcoin. I'm Claire Ross-Brown, and welcome to CCD, where I'll be bringing you the news you need to know, powered by Concordium. Solana, seemingly Wall Street's chosen darling of cryptocurrency, has suffered multiple network failures this past weekend, and this isn't the first time the network has gone down. Now, questions are being asked about its ability to sustain its current mass adoption curve. The popular blockchain has drawn the admiration of billionaire Shark Tank investor Kevin O'Leary, as well as FTX founder and CEO Sam Bankman-Fried. At the weekend, Solana suffered from overload due to bots spamming the network and went dark for 48 hours. Traders and investors rushed furiously to recalibrate their investment portfolios in the wake of a widespread market crash. This network failure resulted in mass liquidations, especially on trading protocol Solana, who then announced that they're looking into a solution for their users. It was later theorized that the lack of current and accurate price feeds may have contributed to the crypto market sell-off. Now, despite these early hiccups, crypto investors and developers have been positive about the future of Solana. This past November, Bankman-Fried said that he thinks Solana has a real shot at becoming the next Bitcoin. Bitcoin, in contrast, has only experienced downtime once in its earliest days for about 9 hours in January 2009. What do you think? Do you think that Solana can become the next Bitcoin? Let us know your thoughts in the comments below. Now, of course, Solana felt the sting of a busy network due to the large cryptocurrency market sell-off. So to understand this a little better, we're now going to go to Carsten Frederiksen to ask him what caused the market to sell off, and are we in for a bear market? Carsten.
Thanks, Claire. Since 2009, we've been in the longest bull market in history. But the market is getting more worried of a potential bear market due to the high inflation and the US Fed's signal to increase interest rates, highlighted in our last episode. When investors become more worried, they take risk out of their investment portfolios. Bitcoin and cryptocurrencies are emerging technologies early on their adoption curve, and therefore, in the short run, are risk-on investments that do get impacted when investors become more risk-averse. Cryptocurrencies are basically networks economies where the value is captured by an underlying digital asset like Bitcoin or Ethereum and is more driven by Metcalfe's law. That makes it more difficult for investors to estimate a firm price, which gives more extreme price fluctuations both in up and now in downturns. So in the long run, nothing has changed for Bitcoin, and it is still reasonable to believe that Bitcoin is a risk-off asset in the long run due to its hard cap supply and its potential to become digital gold. For altcoins, it depends on each project, but realistically, altcoins are risk-on investments, both in the short and in the long term. If we do enter a bear market, we may have to retest the June low of $30,000 or even the late 17 cycle top of $20,000. The key driver is still the inflation. If the inflation stays high, then a bear market seems realistic, but lower prices to follow. But if inflation starts to track down towards the 2% long-term target, then we could see a market jump and a continuation of the bull market.
Thanks for that, Carsten. Now, in a report published last Friday, Reuters laid out the findings of an investigation into the regulatory compliance practices of the world's largest crypto exchange by volume, Binance. The report suggests Binance contributes to run an organization that systematically denies regulators' requests for financial and corporate structure information while not conducting proper client background checks. The investigation opened with a damning claim stating, in public, Binance said it welcomed government oversight, and at the same time the firm was withholding information from regulators, maintaining weak checks on customers and acting against its own compliance department's recommendations. According to Binance's CEO, Changpeng Zhao, these accusations are false and contentious claims. In a tweet, CZ claims this is simply a case of where people who were let go from the Binance and partners that didn't work out are trying to smear us. This is not the first time that Binance has been accused of not complying with regulations. Proceedings against Binance were brought in the Hong Kong International Arbitration Centre in August of last year. A group of disgruntled margin traders claimed they couldn't access their accounts and witnessed substantial monetary losses during a crypto crash event in May 2021. Liti Capital's executive chairman and chief investment officer David Kay explains that Binance is the first company to succeed on such a scale without being registered or belonging to a state or specific country. Binance has operated as a successful global platform despite being accused of dodging individual countries' specific regulations, while sovereign nations simultaneously continue to struggle with regulating crypto within their own borders. Kay points out that Binance has succeeded in becoming a behemoth while being nowhere. They have no headquarters, so they are regulated by no one. Will we continue to allow it to happen? Should country-specific regulatory borders be scrapped in place of global regulatory standards? Let us know your thoughts in the comments below. We have with us today Yael Tamar, the CEO and co-founder of SolidBlock, a property tokenization platform. Welcome, Yael.
Thank you, Claire.
Yael, we'd love to get your thoughts on the future of tokenization and how you think it ties in with the popular NFT and Metaverse space in general.
Tokenization is basically digitizing assets and placing them in the blockchain environment. We've been talking about the decentralized finance for a long time, but then all of these assets existing in the real world, what will happen to them? We need to get them onto the blockchain. And that's what tokenization does. And in terms of tokenization and its role in Metaverse and NFTs, it's very simple. Metaverse is moving our lives onto the digital, right? And together with our lives and what we do in the real world for entertainment, for shopping, for gaming, right? All of that, on top of that, we are moving real assets like real estate, paint, art, music, all of that. And you need to protect the ownership of that in the real world and the metaverse. And that's actually the purpose of NFTs. Yeah.
Yael, I'd love to ask you, because, there is this whole big NFT hype. What do you think about it?
I love it. NFTs are not new. It's just the rebrand of old tokens that represent individual assets, but they've been made popular by celebrities and culture, music, and TV, right? It's perfect. And it's great for us, right? The technologists. And the hype is here to stay. Why? Because it's actually a really relevant and useful case, right? So we need to protect the rights of musicians and artists, and also homeowners and so on. And blockchain allows us to do that with NFTs, non-fungible tokens, these tokens that represent ownership in whatever asset you are tokenizing. So you can use that in the real world, you can use that in the metaverse. And when you combine it with, tokenization, when you combine it with Web3, which is another new trend of, doing internet over blockchain, then we have this powerful world, which is basically empowering an individual to be your own bank, to be your own decision maker, to decide where we spend our time, where we spend our money, how we do it, how we invest. So for me, it's this new digital future that we're entering, right? So I've been asked, where are the flying cars that we've been promised 10 years ago? Well, for me, we don't need flying cars. We need to be in this digital financial world.
If we talk about digital property and land and them also becoming big business with the boom of the metaverse, do you think that, do you see this as an extension of real property being tokenized as people look to carve out their space in the metaverse?
In a way, yes, but real estate is quite different on the metaverse than it is in the real verse. Right? So in the real verse, we are always expanding. The population is growing. You need more space to live. You need more space to shop. You need more space to work. In the metaverse, the space is infinite, really, right? So what is important in the metaverse is the popularity, right? Actually, the real estate there is, you can compare it to real estate on Times Square, right? It's really all about the screens. It's all about what people see when they get there, right? So we're talking about advertising rights. So now investors are buying land in the metaverse. The land in Decentraland or Sandbox goes at $10,000 to $11,000 minimum per, a small land plot, for example. Why? Because you can put your brand there, right? This is where people are going to go. Now, Metaverse is growing wildly. We have course, Facebook renaming as Meta. We have Microsoft investing $70 billion in a Metaverse space recently, just this week. So we know that it's here to stay, right? So that's why right now is a great space for all the brands to buy a space to establish themselves in the Metaverse, and also to build partnerships with games, with experiences, with artists, with musicians, right? So that they can actually create a wholesome experience for the Metaverse.
Brilliant. That was really insightful. Thank you so much, Yael, for joining us today. Really, pleasure.
Thank you. I appreciate it, guys. Have a good day. Thanks. Bye-bye.
We've heard all about the impact of blockchain and tokenomics and how that can impact the metaverse. But no doubt, there are still many asking, what is the metaverse? Let's learn with CCD. The metaverse is not a new concept, but it is one that's growing thanks to the advancement of cryptocurrency and blockchain. The metaverse some of us may have experienced so far would include things like virtual reality games and even virtual concerts. However, the metaverse is turning into big business as many new companies enter this space. Meta, formerly known as Facebook, have signaled their intentions to create a virtual reality with the help of multiple new and emerging technologies. A metaverse of the future could see people using VR to enter a digital realm where they meet and brainstorm ideas with work colleagues, as Microsoft Teams is trying to do, or even do their shopping in a virtual Walmart for virtual goods. However, with blockchain and cryptocurrency, the metaverse can become a much bigger entity with a fully decentralized economy that can function inside this virtual world. More so, blockchain tech means NFTs can be integrated into the digital realm, and you could hang a Bored Ape on your virtual wall. Even virtual land is already being explored in the metaverse with the likes of blockchain companies Decentraland and The Sandbox. It's hard to define what the metaverse is because there are just so many possibilities, and we're currently at the forefront of what many are calling the new internet, but it does look like blockchain and crypto will play an important role. If you're enjoying today's show, like and subscribe and join the discussion in the comments below. We'd like to leave you with the story of someone who's not too worried about the falling price of Bitcoin. Now, although Bitcoin is down around 50% from its all-time highs, newly sworn-in Mayor of New York City, Eric Adams, expressed no regrets taking a substantial loss on his first paycheck. Adams received his first paycheck in cryptocurrency, both Bitcoin and Ethereum, at the time where its value was tumbling. However, the mayor says the purpose of Bitcoin is to send a message that New York City is open to technology. We want to see a large amount of new technology in the city of New York and to encourage our young people to engage in these new emerging markets. There's some strong evidence that receiving one's salary in Bitcoin may not just be a financial decision, it may also improve job performance, such as receiving. Los Angeles Rams star wide receiver Odell Beckham Jr. is another high-profile person who's taking his salary in cryptocurrency. His recent move to the Rams saw him negotiate that he would receive $1.25 million in Bitcoin with a further $3 million in incentives. Hoping to also be a success at his new job is Mayor Adams, who claims, "If Bitcoin can make it here, Bitcoin can make it anywhere." Do you think that the Bitcoin ball can really start rolling in New York City? Let us know in the comments below. Thank you for joining us on Crypto Channel Direct, powered by Concordium. Don't forget to like and subscribe by hitting the button below. And we'll be back next week with news that you need to know. And until then, I'm Claire Ross Round. See you next time.